Good morning traders, Andrew Curry here. There's a triangle pattern emerging on the Great British Pound US dollar, and I want to show you what the candles are revealing about the nature of that triangle pattern. Let's have a look under the bonnet. So here we are, Great British Pound US dollar. This is the 4-hour chart, and if we look here, this is a double top, which we were looking at a few weeks ago in a previous video where I went through my rules for a double top. And sure enough, strong bullish move, hits, rejection. Okay, white space, hits again, rejection. So this is a good indication that we've hit a level where the market is not likely to go any further. And sure enough, exactly what happened, bearish reversal. And if you're a counter trend trader, of course, you would have been looking at the double top and traded the reversal. So what happened after we had the reversal? We had, again, bullish direction, hit this point again, rejected again. Bullish move again, it retested another time. Repeatedly hitting this line and getting rejected would indicate it's a very strong level. We've hit a very strong point. Look, hit, double top, rejection. Hit with a very strong rejection candle. Look at the big wick there relative to the size of the body. Sure enough, rejected again. Hit. Now you would think as we keep hitting this level, very strong level. But look at what's happening within all of this price action here and what it's giving away. Okay, so the first rejection obviously hit all the way down here. And this is the second test. And of course, we know it rejected. But look what happened here. The rejection did not push price down as far as our first rejection did. Okay, so if we look at this quickly here, right? If we were to say, okay, if we get a rejection and within, let's say 2 candles, let's say in this case 8 hours, okay, the market travels that far down. Okay, it doesn't matter the exact distance, just that's a distance, okay? But for another rejection over 2 candles, 8-hour period, the price moves that far down in the same amount of time, okay? Well, which is the stronger indication of a stronger bearish pressure? Well, it's obviously the second one, okay? So, using that logic, quite a strong rejection there, strong bearish pressure towards bullish again, rejection, but look, the rejection did not push price down anywhere near as much as it did the first time. That would indicate a weaker bearish pressure. Therefore, a stronger growing bullish pressure. Okay, so if we just measure that quickly from the right, okay, to my line to the end of the wick, 168 pips. Right, okay, the end of the wick to my line, 128.7 pips. That's roughly 25% less. So a 25% less bearish pressure pushing the price downwards. So yes, we are hitting this level. We are hitting this level again, but the candles are giving away a growing bullish pressure. No level holds up 100%. So we are approaching a strong level, but with growing strength, which will likely eventually push through, or at least that's what the candles are indicating at this point. Now, that's not to say that this test will push through. What we might see, if it was going to be a textbook triangle pattern, let's touch here from close to close. Go. So what we may see, if it's going to be textbook, is probably some movement like that, and then it may break through after that. But what we're seeing at the moment, okay, nothing is guaranteed, as you know, you get losing trades, but the signs are at this moment in time, we have a strong level, yes, but we have a growing bullish pressure approaching that level, increasing the probability of it breaking through, a breakout trade in the bullish direction.